And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Wednesday, October the 26th. My name is John Hoagland. Thanks for trusting me with your time as usual. Yes, we are seeking accurate context, always focusing on good risk management and staying patient. Good morning to my futures family. Already we've got the rooster crowing and we are ready for the trading day. As far as economic numbers are concerned, 7:30, some trade balance numbers came out. We are also waiting for 9 o'clock Central new home sales, which may be somewhat impactful. And of course, 9:30, the EIA Petroleum Status Report. Every crude trader is waiting for that one. So this morning, we've got stock indices, futures lower, especially the NASDAQ, which is down almost 2% this morning, getting whacked by some of the results by Google and Microsoft yesterday. And now we get another smack in the head with Boeing missing revenues by over $2 billion. As far as the other releases this morning, Bristol-Myers, ADP, Waste Management, Kraft Heinz, all of those beating expectations. Boeing, the real downer here this morning. We're still waiting for Meta after the close, as well as Ford and Canadian Pacific Railroad. I haven't heard much about what's going on with the railroad strike lately. I'm hoping that's not going to happen, but it might be interesting to see how these things are affecting the rail stocks. We still have some weakness in the dollar as currencies, metals, and crude oil all higher this morning. The API, the release yesterday for the crude numbers was a surprise 4.5 million barrel boost in crude stocks. We still have crude oil moving higher this morning. The EIA is expecting a 1 million barrel boost in crude stocks. So we've got some of these markets kind of up against some areas where some changes may be ready to happen. It's going to be an interesting day looking at the charts, and always an interesting day in the markets. If you're already in the markets, hopefully things are going your way. I'm kind of happy that Make-Hogue Money is in the afternoon today. I'm kind of leery about some of the early opportunities in the S&Ps, and we'll find out why shortly. I don't know what's going on with Lacey. She's just a little bit crazy this morning. She was a little bit out of her routine, and she's running around the house. I've had her out a couple of times. She seems very excited about the trading day, I think is what it is, really. So looking at the VIX is a little bit higher, still below 30, though, at 28.5. Dollar index continues to leak lower, 110.4, and the yield on the 10-year creeping back down towards 4% at 4.08%. What else was I going to tell you? Kind of glad that Make-Hogue Money is in the afternoon this afternoon. Again, a little bit leery about some of the early opportunities in the equities. We do have group coaching today. That's 12:30 to 1:30. I will be right on time today for group coaching. Let me put the link up here for you for group coaching. If you are interested in coming, please do. Here it is. I think I've got a couple of emailed in questions already, so that's always a good start. Don't you get up on that couch. You got dirty feet. Okay. All right, good morning, everyone. Dark Heaven first in the room. You win the prize this morning, Shaw. Good morning, Jimmy Decker, Dimitar, the Rooster. The rooster is crowing already. Sean Fitzgerald. No, Lacey. No. Down. Good girl. Good girl. Sean, Jules, here she is. Theo, good morning, Caprice. Sunny, Scott Saw, Annie Concord, Orion, good morning, Serenity Trader, Joel, Rob T, Jason Lewis, Glitter Sandwich. It's snowing in Colorado. Feels like it could be here. It's 42 degrees here in the Chicago area. No snow here just yet. Caesar, John, Jordan, Vince, good morning. Bill, Ricardo, Hegel Matters, good morning. Master Roy, Terrence, good morning. George, Lacey is in. Yes, she was on the forbidden couch. They threw her off. She got some dirty feet. We got a lot of rain yesterday, and there's a little bit of mud in the backyard she was just wallowing around in. So she cannot go on the forbidden couch today. Well, at least not for a little while. Barry, Trading Research, Anissa, Marcelo, Dowitzer, Unicus with the quote for the day. We love these Unicus. Please keep them coming. Make your best judgment. Be wrong. Make your next best judgment. Be wrong. Make your third best judgment. Then triple your money. All saying just don't give up, right? Success is never final and failure is never fatal. One of my dad quotes that he stole from Winston Churchill. Another great quote for us, Unicus. Thank you very much for those. Matthew, yesterday was awful. No buy signal using my strategy came to me. Not once. Somehow I was flat. Well, that's better than fighting. I'm glad that you didn't try and fight things yesterday. 100%. Dan Trader, good morning. Joel MB. Vix is for Lacey is low. Good morning. Mert, she's nervous due to the solar eclipse. Maybe that's it. I don't know. JD, good morning, sir. Always a pleasure to see you. Sean Fitzgerald, the Lacey meter. If she's up, running around, so is the market. If she's on the couch, the market is down. Well, let's see if we can put some sort of accountability to that. Maybe there's something to that. Charles, good morning. Kevin, good morning. Jimmy, do you think it's possible the bonds are reversing, which theoretically means the market should sell, correct? Or is that not applicable in today's markets? When the first time I saw the bonds and the equities move opposite was when there was an equity curve inversion. I said, "What the heck's going on?" The trader in front of me said, "The yield curve has just inverted." Now that was 20 years ago, something like that. I'm not sure that it still applies. There's so many things that seem so different these days than in past trading. So it's going to be interesting to see. Columbus, good morning. Typically, the bonds and the treasuries and metals have been a safe haven for when stocks are getting hit. It doesn't seem to necessarily be the same way these days. So I think we're in good shape. We said good morning to everybody. We got time today because we don't have make-home money at 8:20. So let's get into the charts and see what we can see, starting with the daily in the S&Ps. Let's take a look. So yesterday, we had a continuation day above this breakout. We had a continuation above these swing highs. We had a test of these swing lows. And we succeeded in closing above all of them, but not for long. We added 16,000 in open interest yesterday in the S&Ps, which to me is impressive and healthy for a continuation of the upside auction. The challenge is the volume, which the volume on up days doesn't surprise me because we don't really bring high volume on up days. It's when everybody piles in on the down days where the volume tends to pile in. So after the increase in open interest on Monday of approximate 1,600, adding another 16,000 today seems like we're bringing in new business in new areas, which to me is just going to be healthy for the upside auction. Now, as we all know, anything unusual, scary, or bad can take the wind out of any upside auction in the equities, especially these days. We had some mixed and some not so good earnings in a couple of companies yesterday. We got Meta today, Facebook at the end of the day, Ford. There's lots more earnings to come out. We are waiting for some more information as far as the housing situation. New home sales at 9 o'clock is probably our most important number. So in the S&Ps, we may want to be a little bit patient and wait for better trade locations as the day goes on. The NASDAQ, similar but different, might be a different story. So we are kind of mixed in our auction, higher open interest, lower volume. Inside extended trading hour range today, we've got a very kind of a narrow overnight range. This line here is to 20% off the all-time high, 38.44 is what I've got written here. I haven't double checked those lately. Sometimes they move a little bit on me, but I don't think that's necessarily a very important level, other than the fact that it did provide support back here in September, when we were testing the low of this very important day from back in July. Anyways, so we've got a little bit of bad news. How did it treat the S&Ps? S&Ps traded and left a late spike, a very small late spike, and it did close in the late spike. So it is currently showing rejection of higher pricing. Well, the little kick in the teeth we took after the cash close yesterday certainly didn't help. What are we looking at as far as overnight inventory? We don't really have any. Okay, so overnight inventory's flat. We got a late spike rejection. Inside regular trading hour range, here's our overnight high inside range. Here's our overnight low inside range. If we were to open now, we'd be opening in value, which tells me to try and stay a little bit patient. So if I'm going to continue to be looking for opportunities to buy weakness, overnight low looks relatively interesting. We left a lot of excess at our lows yesterday. Getting into this excess and into this messy area here might be a little bit magnetic for us. We've always got the opportunity to trade back to weekly kickoff low before really worrying about changing the upside short time frame momentum that we seem to be having here. So try and stay patient in the S&Ps today. We're ready. We're right in the middle of the range. There's no gap. Perhaps a little bit of repair down here, but again, I'm looking at the high from Monday's high. Seems to be somewhat interesting to me. It's relatively close to the overnight high. I think there may be some fish here if we get the opportunity for an execution at that level. Let's see now. Let's go look at crude oil, which is kind of breaking out, right? We have 4 straight days of indecision in these daily bars. Doji, like doji, a lot of indecision. Now finally we're seeing some momentum outside of our pennant formation. We added 3,200 in open interest yesterday, so I think we've been adding some open interest. That's about, 5,200 on Monday, 3,200 on Tuesday, and the market really wasn't going anywhere. It tells me that the market is probably, if you'll pardon the pun, building energy. We're increasing the number of contracts and the number of people who are paying attention. So we've got an open interest increase outside of our formation. Now we're testing the extreme. Okay, we were kind of looking at these highs here of these candle bodies as the upper extreme. these candle bodies as the lower extreme. We're testing above them. Here's the 30-minute chart. So we did open with a gap. Here's those upper extremes of those candle bodies that we were kind of looking at as resistance. We're above them. We've opened with a gap. If we do have overnight inventory, it's most certainly to the long side. So the inability to close the gap has us looking for a move perhaps to last week's high, weekly kickoff high, and a naked point of control above there. So let's get this to the right spot here. Sometimes these lines move a little bit. So we've been working on trying to accept above. Now yesterday, 100% above, and now we've got a gap to the upside after building open interest on an up day yesterday. So we're putting in higher lows. We've started to put in higher highs. I think the potential for a continuation to the upside is a pretty good probability of occurring. NASDAQ is currently down 1.75%. Finally, yesterday, a day behind the S&Ps, it closed above the weekly kickoff high. It tested the swing highs. It did not take them out. It did not get through these either. Similar markets, similar but different. After the close, of course, we know that the NASDAQ got whacked worse than any of the other equity products. We had higher open interest yesterday of about 2,000. Volume wasn't all that impressive. Again, that doesn't scare me that much. Our overnight low yesterday was last week's high. Our overnight low last night was last week's high. That seems to be providing a degree of support, which it will sometimes. But we had that huge pullback off the high. We have an inside extended trading hour range. However, it's overlapping to lower. Our overnight is overlapping to lower the regular trading hour range from yesterday. Interesting, right? Overnight inventory is flat. Look at the big jump here, okay? I think we did put in a late spike. Settlements all the way up here at 16,580. Oh, I'm sorry, 11,713.50. Looking at the wrong. I got a lot of numbers around me. Sorry about that. So, as soon as those numbers came out, we had the biggest pushback. We pushed us back down below weekly kickoff high. We are still holding below weekly kickoff high. There's some question as to whether we could actually open with a gap to the downside. We did, I think, close this gap yesterday to the tick. And that is where we are right now. Last week's high could be in a supportive area for us. We do have some more visuals down below. But at least for now, we're still putting in higher lows and higher highs. Remember that these markets they tend to be very resilient without no new bad news. 9 o'clock could bring new bad news, or it couldn't. But traders have very short memories. Keep that in mind. Let's take a look at gold now. All right. So with the dollar week, the gold, of course, is moving higher. Euro is moving higher. So we had a pretty big jump in open interest yesterday. And it was an up day overall. We had a 12,000 in open interest. So this balance that we've been in after breaking out above that is beginning to grow some new energy, some new blood into the marketplace. It looks like it's ready to continue its move to the upside. But so much of the momentum or lack of momentum in gold is going to be directly related to the U.S. dollar. So we've got some potential continuation or some potential failure in this market today. That just kind of creates cognitive dissonance, but it is what it is. So we opened with a gap. We've closed the gap. Overnight inventory most certainly was long and starting to reconcile. So we see that this old trend line seems to be providing a degree of resistance for us over time. This trend line comes from way back. Support becomes resistance. Is that what we got going on here? So my question is, after opening out of range and out of value, are we going to accept yesterday's range? Are we going to accept yesterday's value? If we do not, I look at this as kind of an opportunity to buy a weakness. Makes me a little nervous because I think that there's some more overnight longs that are just hanging tight here at this level, but at least this gives us the opportunity to limit risk. Last week's high, is that resistant? Is this old trend line resistant? How much do we like this market? How weak is the dollar going to be? Keep your eye, of course, on the dollar. Excuse me, my goodness. Forgive me. So now finally yesterday in the euro, we got some new blood, some new business. That's what it's going to take to continue this move, is continuation of new business coming in to buy this market. We added 16,000 in open interest yesterday in the euro. Low volume though. That's a pretty big jump in open interest. I'm not sure if I believe that is going to remain true, but it is there on the bulletin. The preliminary bulletin says we added 15,873 new contracts right up to and against weekly kickoff high, which we are now trading above. Guess where settlement was? Par. 1-to-1. The euro to the dollar. 1-to-1. Weekly kickoff high. Resistance yesterday. We're above it now. If we come back to it, it could provide us a decent opportunity. We've got the range for high from yesterday. We've got value high from yesterday. There's a potential for a market state change in this market. Look how long we've been moving lower. We've been towing this line. We're above it and adding open interest and actually showing some potential momentum. Technically, this market, it could change market states. Downside, balance, upside. Could it be so? Now to the 10-year, similar situation, mostly towing this line all the way down. Did anybody check the open interest yesterday in the 10-year? The preliminary estimate was an additional 96,000 contracts in open interest in the 10-year. That is notable for the 10-year. There's 4 million contracts of open interest in the 10-year. A move of 96,000 is rather substantial on a breakout. Volume was higher than the previous day, but not necessarily all that impressive. Already we've got an overlapping to higher extended trading hour range. We're monitoring for continuation. In short time, we're looking for higher lows and higher highs. That's how we're monitoring for continuation. Higher lows, higher highs. Higher low, higher high. Got to test this naked point of control. It seems to be a point of contention for us. But we're in range, we're in value. If I'm looking for opportunities, I want to try and find opportunities to execute on weaknesses. If we think that this market has changed market state and is likely to continue higher, we want to look for markets for opportunities to buy it when it exhibits weakness. Don't want to buy the high because then we're going to have to withstand a whole bunch of pullback before the trade actually might become profitable. Anything can happen. What we're looking at is probabilities and nuance here. Access below weekly kickoff low. Ever since then, the market's been putting in higher lows and mostly higher highs. Look at the natural gas. 2 days ripping to the upside, and now it looks like it's heading back to the downside. The November contract expires tomorrow. It lost 5,100 in open interest yesterday in the November contract, but overall, it added 1,200 in contracts. That's overall. That's all the contract months of NASDAQ. So it seems like we may have trapped some longs up here. We certainly see this pullback nasty. Here's the 30. Okay, our overnight is inside extended trading hour range. A big pullback. We've got a lot of overnight shorts in this market. If it's not just longs that just said, you know what, the heck with this. But it's giving us opportunities. What was I saying? Oh, what I was thinking is anywhere that I can fish between our overnight low and yesterday's low is a very interesting situation if we get the opportunity. Remember, I'm always looking for my stop first. Where does this market prove me wrong? Where does price have to advertise to invalidate this trade? And then I'm going to see if I can get into that trade as cheaply as possible. I miss a lot of trades. That's okay. Yep, this is going to be a fun day. Right. FOMC is next Wednesday. Don't forget, we also have the preliminary for the GDP number tomorrow. That's going to be an impactful one because everybody is paying attention to the GDP. Now, this again is the preliminary number, and it's very important. What we are looking for is they're expecting the GDP in quarter 3 to jump a little bit. The quarter 2 GDP was minus 0.6%. They're expecting the third quarter GDP quarter over quarter to increase by 2.4%. That's the expectation. Seems a little aggressive to me. Tomorrow we also have jobless claims, durable goods orders, and the natural gas release, which again tomorrow is the expiration for the November contract for natural gas. All right, so we have EIA today. Yes, 9:30, Mr. Tarandi. Yes, 9:30 as usual. From what I see, we are looking at was it a 4.5 barrel increase in crude stocks according to the API yesterday, but today we are looking for a 1 million barrel boost in crude stocks here in the U.S. So we'll wait and see. I'll have to wait and see. All right, let's get ready. Got about 15 minutes before our equity markets open. Take your deep breath with me. I hope everybody does do that. It always feels good to do that, and we will. Gotcha, Ray. Yep, I'll check that for you. Be humble, grateful, and creative in your trading today. be kind to yourself, of course. Make sure you say a prayer for world peace, of course. You see you in the proverbial trading pit in just a few minutes. We'll see you for the coaching session. We'll see you for Make Hogue Money. We'll see you for the recap after Make Hogue Money today. So busy afternoon for us. I'll get to spend a lot of time with you. Hopefully you'll want to spend some time with me. So get out there and trade well today. Make some money, and we'll see you later on. Trade well.